Hello and welcome to Business Live. Coming up in this bulletin, the Bank of Ghana commits to gold reserve liquidation program as it projects suggestions of the country shortchanged by the initial transaction. We are live with an economist. Also, Monetary Policy Committee of the Bank of Ghana cuts its key lending rate by 250 basis points to 15.5% from 18%. We are live with the business community. We have these and more coming up in this bulletin. My name is Winston Taki. Now let's bring you updates from the global commodities market. This is Business Live, and now to our first business story. The Bank of Ghana has maintained that it will press ahead with its gold liquidation program due to its impact on the economy. This was contained in a document sent by Joy Business. There is more in this report.
According to the Bank of Ghana, the move has been influenced by current global financial market conditions as well as assets price movement. It, however, went ahead to maintain that future adjustment would also be guided by best practice when it comes to reserve management, whilst safeguarding Ghana's external position. On the liquidation of the bank's gold reserves, the central bank argued that this was a strategic diversification of its assets and not a crisis response. It maintained that the transaction involved converting part of its gold holdings into foreign exchange assets and not a drawdown or loss when it comes to the country's gold reserves. Fresh data from the Bank of Ghana showed that its gold reserve dropped from 38 tons in October last year to 18.6 tons in December 2025. However, some industry persons have raised concerns about the decision, the margin of depletion of the reserves, and the timing for the action.
Joining us on Zoom to discuss this is economist Professor Peter Korte. Prof, it's good to have you with us this evening on Business Live. Now, how convincing is the Bank of Ghana's explanation for selling part of its gold reserves, and what does it reveal about its broader economic strategy?
Well, good evening to your discerning listeners and viewers. I think the central bank, just as it tries to accumulate gold reserves, also has the right to reduce the reserves for other strategic moves. And I don't find anything wrong with that, with that action. Once it is able to do that to finance, if it's forex or any other purchase, it depends on the season. There are seasons that they have excess liquidity, excess forex. There are times that there's intense forex demand, and they need to meet some of this demand. So I personally don't find anything wrong with that. It's within their mandate to do so.
Prof, is the Bank of Ghana's decision on its gold reserves economically justified, or does it create longer-term risks for the country from your perspective?
It doesn't create risk. It is very much justified. It doesn't create risk because even if you look at the level now, I mean, our reserves are still quite high compared to some months or some periods in the past. And therefore, I don't see there's any potential risk that might cause. I mean, if we deplete so rapidly and our import cover falls so low, then that's where there's the cause for alarm. But at the moment, I think it's too early to want to conclude.
Great. Now, with global gold prices easing after a strong rally over this period, should Ghana be concerned given gold's importance to reserves and export and possibly fiscal planning?
So can you say that again, sorry?
Should we be concerned with now that we're seeing gold prices rallying and easing in this short period? Should we be concerned now that it is quite important in our reserves and export planning?
Yes, I don't think we should be concerned. What is required is for us to plan. You see, these commodity price booms and bust happens all the time. It happens with oil, it happens with cocoa, it happens with other minerals. So we are enjoying the gold price boom, and that we are using the export revenue to cushion our forex, which made the forex quite stable. So going forward, I think we should take advantage of this stability, take advantage of this excess, and be able to invest into the critical areas as we generate more export revenue. We cushion ourselves for the future. We also have to diversify because it looks like gold accounts for over 50% of our export revenue. That is not good enough because we ought to diversify. Should gold prices crumble to its level, in previous past, we may have problems. Just like it happened with oil in Nigeria, where they had stagnation. We don't want that to happen to our economy. So let's diversify. Let's not overlook the other critical sectors like agriculture or manufacturing, for instance.
Prof, to add to the diversification that you're proposing, what other strategies should government prioritize to manage gold price volatility and protect the economy from the external shocks that you made mention of?
Yeah, so we should also be processing. I mean, we are fond of exporting gold in its raw form. We don't add much value. These days, South Africa, for instance, is taking advantage, buying gold and processing quite a good chunk of the gold they buy. We should also learn from this, process more of our gold. We shouldn't be exporters of raw materials. Then when the gold is processed and sold to us, they are sold to us at high prices. So what the gold board is doing now with PPMC or PMC was doing the same. But I think they should accelerate that move and make sure we process more of the gold so we don't just export gold in its raw form.
Well, considering the current monetary, fiscal, and external conditions, how would you assess Ghana's economic outlook in the near to medium term in 2026?
Well, the outlook looks favorable. It looks good, and we've now stabilized. So we need to then gradually accelerate growth. But having said that, we should also not be caught in the web, our usual cycle, where when the IMF is with us, we tend to do so well, but as soon as we exit the program, then we are caught pants down. This year, we are likely to end the IMF program, and I think all the good lessons, all the good fiscal management that we have learned under the program that was developed, we should apply them going forward. Once we do that, then the outlook for me looks very positive because now confidence, stability is quite on the rise, and if we can work with that, we can build on that, then we are likely to see positive outcomes in 2026. Otherwise, if our usual political business cycle, a usual cycle where when we exit IMF, when we are close to election years, we tend to do all the bad things that damages our economy, then we would have challenges. But I believe we've learned our lessons. I believe we have prudent management in place who would ensure that we don't go back to our old ways.
Thank you very much, Professor Peter Korte, for your time here on Business Live. Now, still staying on the financial sector, the Monetary Policy Committee of the Bank of Ghana earlier this week reduced the lending rate by 250 basis points to 15.5% from 18%, citing improved macroeconomic conditions and sustained growth momentum in the economy. But what does this mean to businesses? Joining me on Zoom is the president of the Ghana National Chamber of Commerce, and Industries. Stefan Abbas Maizen, it's good to have you here with us this evening. Now, I want to get from you, what is your assessment of the Bank of Ghana's decision to cut the policy rate at this time?
I think it is good news for industry. It's a very good news for the private sector. This is news that we have not had in a very long time, at least for the past 1 year, because now in the 1 year that has passed, interest has come down by 11.5% take points. So that is good news. I mean, interest rate went up all the way to 40-something%. And for this government to have worked so hard, diligently, on our macroeconomic situation, the Bank of Ghana, the Ministry of Finance haven't worked so hard. I think they need to be commended for such a good job that they have done so far.
Abbas, now, do you think the size of the rate cut met market expectations, or was a deeper reduction possible from where you sit? Actually,
we at the chamber we're expecting a minimum of 300 basic points. That is our 3%. So we're expecting to have come down to about 15% minimum, not the 15.5. So that's what we're expecting for it to have come down. But let me go ahead to say that the issue now is not working so hard to bring interest rate down. What is most important is getting access to the funding. If you look at what I'm wearing today, I've traveled all the way to New Ebring to visit a company that is producing a company under the One Nation One Factory that is producing briquette for export, and they are not even getting the funding to be able to produce. So they've totally shut down, laid off people, about 100 members of staff. So we needed to come and visit them to understand the challenges. And when they came, that's one of the things they're talking about, getting access to the funding. So it is not so much of the work that the Bank of Ghana is doing, the Finance Ministry is doing to ensure that rate comes down. Even if rate comes down to 10%, and we can't get access to it, for us it's a zero-sum game. So we are entreating the financial institutions to do very well to ensure that they make funding available to the private sector to grow industry.
Abbas, are you concerned by the Ghana Association of Banks call to manage expectations about how quickly lending rates will fall, since you made mention that now the key challenge is access?
Will you ask your question again?
So, are you concerned that by the Ghana Bankers Association, they are saying that indeed the key lending rate might fall, and they are quite optimistic by that expectation going into the coming month that it may fall by your assessment? I'm asking that one of your challenges is having access to the funding. What do you make of it?
Okay, so the Bankers Association needs to be up to speed. They need to up their game. I don't even see the concern that they should show in the interest rate coming down. What is the purpose of the financial institutions? The financial institutions are there to support industry, not to go into the capital market. They are there to support industry to grow, because it is the industry is growing that is going to create jobs and employment, okay, in all sectors of the economy. So if their concern is interest rate coming down, then they are not really well positioned to work with the private sector. So I can't even explain. I understand their challenge. They are there to support industry. The banks are there to support industry, and they have to be seen doing that. They have to be seen doing that, and they are not doing that to support industry. So we are on them. We are requesting of them to ensure that as the Bank of Ghana is doing everything to bring down interest rates, they do everything to make it accessible. Look, I did a bit of research along the sub-region, and our closest neighbor, Côte d'Ivoire, Benin, Togo, their interest rate is around 5.25. Okay, 5.25. We are 15%. That is even the reference rate. Then these banks are going to add their own arrangement fee, profit margins, and all of that to it. So now we are going to look about 20%. What are you even doing to pay 20% interest on a facility? What are we producing? What are we even doing to pay 20% interest on a facility? How are we expected to go as a country? How is industry expected to go to employ people, expand? Okay, because the facility a bank gives you is not the only component of production. The facility a bank gives you is not only the only component of production. You have labor to take care of, you have electricity and water to take care of. Okay, and other things that are associated in production. So interest rate needs to go down, and we are entreating the bank to really work hard to bring it down.
Okay. But let me get your thoughts. Let me pick your thoughts on this. We know the non-performing loans is falling and has fallen slightly. Is this real progress, or does it remain a serious concern, not just for the banking sector but for the business community?
Yes, it still remains a major concern. We understand that non-performing loans, as much as it is, needs to go down. But it also means that we need to, as businesses, we need to be able to meet our obligations to banks, because it's also what the banks trust to give to industry. So yes, in as much as we sympathize with the banking institution and work is also being done, performing loans, we also want the industry to ensure that they pay up so that trust is built, and then more can be given to industry. So yes, we are very much concerned. And these are some of the things that we have also been advocating and working with the private sector, and especially the members of this community, and particularly the members of the Chamber of Commerce, to ensure that it all goes in the favor of all Ghanaians. So it can't be one benefit and everybody loses. So yes, we are very concerned with that as well.
Stephen Abbas, we thank you for your time here on the Business Live. We have more business update for you here on the show. Stay tuned. We'll be right back after this break. Welcome back to Business Live. My name is Winston Take. Now to more business update. The non-performing loan ratio of banks improved to 18.9% in December 2025 from 21.8% in 2024. Although it remained elevated, here's more in this business report.
According to the Bank of Ghana, ongoing policy measures aimed at resolving legacy loans, enforcing strict credit underwriting standards, and addressing willful defaults are expected to further improve asset quality. Similarly, the easing of the policy rate is expected to support credit conditions and strengthen financial intermediation going forward. The central bank added that the banking sector recorded a strong performance in 2025. Total assets increased in the year, driven by growth in domestic deposits, domestic borrowings, and shareholders' funds. Additionally, the asset growth was primarily reflected in investments that increased significantly. The latest financial soundness indicators also showed that the banking sector was solvent, profitable, and efficient. Banks wrote off 1.39 billion Ghana cedis as bad debt in 10 months of 2025. This was 56.7% more than the 1% increase in October 2024. According to the Domestic Money Bank's income statement, the total provision was made up of loan losses, depreciation, and others. In October 2024, the government wrote off 3.22 billion Ghana cedis.
The Chamber of Petroleum Consumers is projecting a marginal reduction in fuel prices from next week as oil marketing companies prepare to adjust pump prices from February 1st under the bi-weekly pricing window. However, there are concerns that pressure on the cedi and rising crude oil prices could push fuel prices upward. But Executive Secretary of the Chamber, Duncan Amwa, says some favorable local conditions could alter the outlook.
Prices don't look to want to come down globally. In fact, international markets are pointing upwards. You have the bullish sentiments at play currently. And so we could see prices go up. For diesel in particular, there's a surge or a spike, in that price. Fortunately for you and I, there's still quite a lot on the Ghanaian market. So you may not see that, like I indicated, the 1st of February. If anything at all, there will be escalations. It will probably be for the second window, February, which would start on the 16th day of February. But for now, I think that we are all safe, we are all fine. Most likely, you would see petrol come down. Diesel could sustain at the levels it is currently or go up just slightly. But whatever it is, we are not in trouble yet, except that the global market developments could lead us somewhere if the US-Iran-Israeli conflict does not cease immediately.
That'll be all for Business Live here on the Joy News. My name is Winston Taki. Up next, we have for you some conversation on crypto, a virtual platform and finance here on Joy News. That's for Beyond the Numbers. So stay tuned, don't go anywhere.